Hey guys, how's it going? Lewis Harding Investor here and welcome back to my channel. In today's video I'm going to be analysing Google stock and working out whether it's worth buying or not. Let's get straight into it. So Google's parent company is called Alphabet, and Alphabet has a couple of sections to it. They classify themselves as the Google section and then other bets. This other bets section has all sorts of things in it, such as Waymo, the self-driving service, and an actual investment in SpaceX. But let's focus on the actual Google business itself. So as you're all aware, Google Search, the most popular search engine in the world, 90% of all searches go through that engine. And then Google has other services such as Android, YouTube, and then stuff like Gmail, Google Maps, etc. So there's a host of different things, and as you can see there's quite a few employees, way over 100,000, so it's a very big company. For the financial year ended 2020, 93% of Google sales went to the services section, and then a small 7% went to the cloud section, and then as you can see a very minuscule amount to the other bets. And then in terms of worldwide location, nearly half are in the US, to be expected, and then the rest are worldwide, so quite a nice even split, but the vast majority of the revenue is coming from the United States. Here's an extract of the income statement for Google, so let's have a quick look. Yeah, you can see that the revenue is growing year on year, the profit's growing year on year, but the margin is staying very consistent, which is very good to see. Yeah, Google is a bit of a ridiculous business, to be honest. 20% margins for a business this size, it is awesome, honestly. It's one of the best businesses around. And they have such a monopoly on the search that I see this continuing. And you can see the boxes in blue, these are analyst expectations for the coming years, and you can see the revenue figure in 2023 is close to being double of 2020, which is very interesting news, what analysts think is going to happen. Anyway, that's the income statement, pretty simple. The company's growing a lot, even due to its size. It's very profitable. Yeah, not much to say apart from that, fantastic. Here's an extract of the balance sheet for Google. So the key figures which stand out for me is the big cash balance of 123 billion. Then alongside this, the big free cash flow balance of 43 billion. And then finally, the return on equity of 19%, which as you can see, it's staying very similar year on year, which is a really good sign. As the business is growing, the return on capital equity is the same. So all good there, and going into the future it looks like this cash balance is going to get bigger and bigger, and the free cash flow will follow suit. So yeah, all thumbs up from me. So after putting Google through my 4-pillar stock analysis, you can see that it ticks pretty much all the boxes. Pillar 1, 2 and 3 are all passes. You can see the dividends one is actually in red, however they don't pay a dividend, so it can't really be in the red. They prefer to reinvest in the business. But you can see that pillar 4 has ultimately failed, which is the most important pillar, because you've got to buy at a fair price when you're buying a stock, or any asset for that matter. So yeah, the PE ratio and the price to free cash flow ratio is far too high for me right now. And then going on to the DCF valuation, I would like to buy Google around $1,600 based on my calculations, which would ultimately mean a 35% drop for Google before I go ahead and buy. So yeah, let's move on to my calculations and how I've got to that figure of $1,600. Moving on to my DCF calculation, so as you can see, this is how I've got to my figure of 1,600 for Google. Yeah, I've taken the free cash flow figures predicted by analysts, which were on Market Screener. I have discounted these by 10%. I've come to a terminal value. I have also adjusted for the cash balance on hand for Google, and this is how I've got to my $1,600. So yeah, essentially Google is a bit out of my price range for now. A fantastic business, don't get me wrong. However, you need to buy businesses at a fair price based on the return. And if you was going to buy Google right now, you're looking at a 5% return, which for me is not good enough, especially when inflation is 5% at the moment. So yeah, it's important to buy at a fair price and buy at a good price, in fact, as well. So yeah, for now, I'll put Google on my watch list. I will be very interested when it gets to a price I'm happy with. If it does, we'll have to see. These big tech names just seem to keep on going on a massive rally, don't they? So yeah, we'll have to see, but I hope these calculations make sense. And yeah, this spreadsheet is available on my website, but I will put it in the description down below so you can have a play around and see if it all makes sense to you. So yeah, my thoughts on Google. So as you can see from the numbers, they speak for themselves. It is an absolutely fantastic business. And then the business itself, the search engine and the video content platform in YouTube, Gmail, honestly, even Google Maps is an absolute lifesaver sometimes when I was going to start my new job and I just popped it on Google Maps, got me there in a jiffy. So honestly, Google is absolutely fantastic and it helps us this is the way I see Google. It is a part of our brain now, Google. If you want information here and now, boom, you've got it within a second. Absolutely phenomenal. And we could not live our lives without it, let's be honest. The encyclopedia of the internet, just go to Google, you've got it. So yeah, I think alongside the other big tech companies, so Google, Amazon, Apple, Facebook, Microsoft, these companies do trade at premiums to what their valuation probably is. And there's a reason for that, because they are absolutely fantastic businesses, but it makes us as investors, as value investors, it makes it really difficult to go ahead and buy them, because if the price isn't right, we're just not going to go do it. So ultimately it's about being patient, add it to your watch list, and don't let FOMO get involved in your head and your headspace. Be patient, be disciplined as an investor, and it'll work out well for you in the end. And yeah, I'll be adding Google to my watch list, and when it gets to the price I'm happy with, I will be buying, most likely. Forever, I will hold this stock, and I'll probably give it down to my kids and grandkids for sure, because it's that good of a business. Yeah, so I must stress that you need to do your own research when analysing stocks, and do not take what you see on YouTube as gospel. You need to go ahead and make sure you understand everything involved with the company and the fundamentals. And as always, I'm not a financial advisor, and please read my disclaimer in the description down below. Thank you very much for watching today's video. I really hope you enjoyed it. If you are new around here, please leave a like and a comment on the video and subscribe to my channel. Thank you very much for watching. I'll see you next time.